Hello viewers, welcome to my channel. I'm Hasham. So now this is the last and final theory video on computing the profits and gains of business and profession. Last two videos I've explained you what is the procedure in computing the income from business. Income Tax Act says whatever expenditure incurred to earn the income will be allowed as deduction. But some examples have been given by Income Tax Act regarding the deductions to compute the income from business. The last two videos, so many examples I've explained regarding what are the provisions under Income Tax Act regarding the deductibility of those items. Now in this video, I'm going to explain you about the deductions which are not allowed. That means some expenses and losses are there which are not allowed as deduction under Income Tax Act to compute the income from business, and the procedure how to compute income from business. These two topics I'm going to cover up in this video. So all the problems are based on these provisions. So have a good, with full concentration, watch these three videos, be perfect regarding the provisions, and then confidently we can solve the problem on computing the income from business. So before going ahead, take the screenshot of the points which are written on the board, then I'll explain all the points in detail. Now, last video I have explained you what are the deductions allowed under Income Tax Act. Now what are the expenses and losses which are not allowed? Which are not allowed by the income tax rules. That's what I'm going to explain you. Following a few examples of expenses and losses which are not allowed as deduction. You have to keep all these points in mind because these points will come while doing the problems. First item, provision for doubtful debts. If in the profit and loss account debit side provision for doubtful debts is given, immediately you should say it is not allowed as deduction. Bad debts are allowed, but provision for doubtful debts not allowed. Similarly, provision for taxes. The provision for taxes are not allowed as deduction. So if it is given on the debit side of profit and loss account, don't allow. Add back. Then personal taxes like income tax, gift tax. Personal taxes are also not allowed as deduction. Example, income tax, gift tax. But the business taxes like GST, excise duty, customs duty, etc. These items are the business taxes. It will be allowed as deduction. So in the profit and loss account debit side, if income tax or gift tax given, not allowed, add back. Whereas if these business taxes are given, GST or customs duty, it will be allowed as deduction. Next one, expenses not relating to business. In profit and loss account debit side, if you find any expenses which is not related to this business, it will be disallowed. Example, the repairs of building. It is not related to business, disallowed. Suppose if the building is owned by the business and the building is used for the purpose of the business, then repairs to building will be allowed as deduction. Then any personal expenses paid from the business. Like for example, personal expenses of the owner paid by the business. Debit side it is given. It will be disallowed, not allowed. Next one, interest payable on borrowed amount from outside India. Income Tax Act says if money is borrowed in India, then interest paid or outstanding interest will be allowed as deduction. But if money is borrowed outside India and interest is payable outside India, Income Tax Act says TDS should be deducted. Tax deducted at source, TDS should be made before paying the interest outside India. If TDS is not deducted, no deduction will be allowed for interest paid outside India. Then capital losses will not be allowed as deduction. Revenue losses will be allowed. Recurring losses, expected losses, that will be allowed. Just like bad debts. Bad debts is a revenue loss. Expected loss, it will be allowed. But capital loss will not be allowed as deduction. Then fines and penalties paid for violation of any law. If there is any violation of law due to which any fine or penalty is imposed on the business, those fines and penalties are not allowed because it is in violation of law. Then notional payment like interest on capital, salary paid to owner. Imaginary payments like interest on capital. Actually, interest will be paid on borrowed funds. Interest should not be paid on the capital. But if profit and loss account debit side, you will find interest on capital. Immediately you should think it is not allowed as deduction. Similarly, salary paid to proprietor. Actually, salary will be paid to the employees. Salary cannot be given to the proprietor, owner. Owner will get the profit of the business. So if salary to proprietor is given, it's a personal, disallowed. Outstanding interest on loan taken from banks, public financial institutions. Regarding interest payment, the provision of Income Tax Act is whether interest is paid or not paid, outstanding, both are allowed. Even outstanding interest is also allowed, but if the loan is taken from banks or other financial institutions, then interest paid will be allowed, outstanding interest will not be allowed. So from banks or financial institutions, if interest is paid, then only it will be allowed. Outstanding will not be allowed. According to income tax rules, payment for revenue expenses exceeding 10,000 has to be made through account pay check or bank draft or through any other electronic mode. So one provision is given under income tax rules that any revenue expense exceeding 10,000 rupees should be paid either through cross check or bank draft or any other electronic mode. That means it should not be paid in cash. That means any expenses exceeding 10,000 rupees should not be paid in cash. If it is paid in cash, it will be disallowed. If it is paid through bearer check, not crossed check. If it is paid through bearer check, not allowed. If the payment has been made in cash or through a bearer check, the entire amount is disallowed. But this rule has some exceptions. For example, if the payment is made to the government or to RBI or to LIC or banks or other government corporations, etc., or to the cultivator of purchase of agricultural produce, or payment made on a day when the bank is closed due to holiday or strike. These are the circumstances in which even if the payment of more than 10,000 in cash, it will be allowed. If more than 10,000 is paid in cash to the government, to RBI, to LIC or to banks or to a cultivator of agricultural produce, or the payment was made on a day on which the bank was closed due to holiday or due to strike. Under these circumstances, even if it is paid more than 10,000, it will be allowed. But without these circumstances, if any revenue payment is made beyond 10,000, it will be disallowed if it is paid in cash. Procedure for computing income from business or profession. How to compute the income from business or profession? The taxable income from business or profession are to be computed in accordance with the method of accounting followed by the SSC. See, there are two methods of accounting called cash system and mercantile method. Mercantile method and cash method. In mercantile method of accounting, all expenses, whether paid or not, should be taken. All incomes, whether received or not, should be taken. That is called mercantile system. So many business houses, they will follow mercantile system. But there are few business houses which follow cash system also. So Income Tax Act is not suggesting which method you should follow. It's left to you. Whatever method you follow, the same method will compute the income. So if cash system is followed, the business or profession, they will prepare receipts and payments account and income and expenditure account. So by using receipts and payment and income and expenditure account, we find out what is a taxable income. Similarly, if the business is following mercantile system, they will prepare profit and loss account. So from profit and loss account, we calculate the taxable income. So how to calculate? Two models are there. Model number one, when profit and loss account is given. In the problem, profit and loss account is given. From that profit and loss account, we have to compute what is the taxable income according to the provisions of Income Tax Act. The SSC may prepare their own profit and loss account according to their own convenience, according to their own method. But that profit and loss account is not acceptable to the income tax department. They will say that in order to find out the taxable income, some procedure has been given. What is the procedure? Every business will prepare profit and loss account for each accounting year. When the SSC follows mercantile system of accounting, in the preparing P&L account, all expenses, whether paid or outstanding, all incomes, whether received or receivable, should be taken into account. Now, for computing the income from business, the following steps are to be adopted. First step, take the net profit as per profit and loss account. Already profit and loss account has been prepared by the businessman. Take the profit as per profit and loss account. To this, we add a few items, we deduct few items. First of all, add back. Second step, add back the inadmissible expenses. Inadmissible expenses means those expenses which are not allowed by the Income Tax Act. That means the SSC has debited to profit and loss account, but Income Tax Act says these expenses are not allowed. Those are called inadmissible expenses. Example, provision for doubtful debts. Just now I have explained. Provision for doubtful debts, provision for taxation, personal taxes, capital losses. These are the items Income Tax Act specifically says these are disallowed, not allowed. But already it is debited to P&L account. Now it is called inadmissible. Now we add back. Step 3. Deduct expenses which are allowed as per IT rules but not debited to profit and loss account. Some expenses are there which are allowed by Income Tax Act, but profit and loss account it was not there. So now we deduct. So deduct those expenses which are allowed by IT rules but not debited to P&L account. Step 4. Deduct incomes which are credited to profit and loss account but it is not taxable as business income. Example, in the profit and loss account credit side, rent from house property is given. We know rent from house property is taxable under income from house property. It is not taxable as a business income. So we deduct because these are the incomes which are credited to profit and loss account but taxable separately. Then 5th, deduct items which cannot be treated as incomes. Some items are there which are credited to P&L account, profit and loss account, but Income Tax Act says these are not incomes at all, not at all incomes. Example, refund from income tax. Refund from income tax department. So this refund of money from income tax department is not an income. Our money, we have paid the tax more. So income tax department has refunded. It is not an income. So if it is credited to P&L account, deduct. Add incomes related to business but not credited to profit and loss account. There may be some incomes like sale of scrap, sale of empty bags. These are the business incomes only, but profit and loss account it is not credited. So these are the incomes which should be added. Last, the resultant figure is the income from business or profession. After following these steps, finally whatever figure you get, that figure is the income from business. That's it. So this procedure we are going to follow in most of the coming problems to compute income from business. Now second model is when receipts and payments account is given. Some business or profession, they will follow cash system of accounting in which they will make receipts and payments account. Actually receipt and payment account is simply a cash book only. Debit side will take all receipts, credit side will take all payments. All types of receipts will take on debit side. All types of payment will take on the credit side. Now we want to find out the taxable income. In this case, what is the first step? Take all revenue receipt relating to the business only. That is capital receipt, income relating to other heads and personal incomes are ignored. So debit side, you take into account only revenue receipts which are related to the business. If any capital receipt is there, don't take. If any receipt which is not related to business, don't take. If any personal receipt is there, which is debited to receipts and payments account, don't take. Only revenue receipts relating to business should be taken. First step. Second, take the total of all revenues receipts. What are the revenue receipts you have taken? Take the total aggregate of that. Third step, deduct the revenue payment. Now credit side, you will find all payments are there. But from those payments, take only revenue payments. The capital payments or payments for personal purpose should not be taken. Only revenue payments like purchase of material or payment for expenses, etc. Now deduct depreciation as per income tax rules. Now depreciation will not come in receipts and payments account. So depreciation is allowed as per the income tax rules. So whatever depreciation is there, deduct depreciation. Then the resultant figure is the income from business or profession. Finally, we'll get income from business or profession. That's it. So in this video, I have explained you some of the expenses and losses which are not allowed by Income Tax Act, and the procedure how to compute the income from business or profession. Two models. First model when profit and loss account is given. Second model when receipts and payments accounts are given. Inshallah, in the next video, I'll start the problems on computation of income from business and profession.